Okay, we're live. Perfect. Welcome to another broadcast of Master Investors Company. Glad to be here again today with another episode about business, money, and investing. Our mission here at Master Investors is to elevate the financial well-being of humanity with high-quality financial education made simple. Please make sure you subscribe to the channel, comment, and like this valuable content that we're going to be sharing with you today. Also, I want to invite you to our main website. I'm going to leave the link in the description. You can see it in front of your screen right now. It's MASTERINVESTOR.education. You can find our e-courses in there. You can also find our latest ebook called The 10 New Rules of Money by Master Investor on Amazon or Kindle. Get the book because it's going to help you understand more about money. And the more we understand about money, the more wealthy we will become. It's inevitable that we achieve more wealth when we know more about business and investing. That's why we speak about business all the time here in our channel, because it has to do with investing, okay? A master investor hones down the ability to study financial education every single day, because entrepreneurship does not have a graduation date. In other words, we have to compound more and more knowledge. And remember, information and knowledge, there's a big difference, and we're going to see that on today's video blog. You can find the blog that we published about 2 days ago on our main website, which is linked to this video blog that we're doing today. So you can read it. If you're a person that likes to read more than watching a video, then we're doing both. So you can find it on our main website on the blog tab. And we're going to be speaking about the difference between, information and knowledge. One thing is to have the information, but knowledge is the ability to apply that into real life and know what to do with money, okay? A lot of people have a lot of money, but they're not wealthy. And that's the big problem that society lives today. We have people that work hard for money, but they're not financially free. They don't have any freedom. They don't even control their time. They work for earned income, okay? And we talk about it all the time here at Master Investor, that there are 3 types of income a person can work for in their life. The type of income the majority of people work for is called earned income or ordinary income, which is the type of income that you exchange your time for money. And for someone that wants to achieve great things in life in regards to your passions and goals and making an impact in life through your purpose, because we're all talented in some way or another. Working for money, exchanging your time, killing your time, giving it to somebody else is the worst type of income you can build. Earn income, because you get taxed at the highest bracket. The laws are not in your favor, and somebody else controls the most valuable asset we all have, which is time. Regardless whether you're poor or a person is a middle class or a rich person, we all have 24 hours a day, and that's what we have in common. We have time in common. That's why it's the most valuable asset we all possess, regardless of how much money we have. But time, we have to treat it as a real gold, because we can't, it's more valuable than gold, because we can't get time back. So taking control over your time, not working for somebody else's dreams or company for the rest of your life, is something that you want to start taking a look at yourself and saying, hey, am I giving my time away to somebody else? Am I working for somebody else? What if you get fired after 25 years of giving your time to that person? Can you sell the job that you worked so hard? And at the end of that road, you have nothing to rely on. You can't even sell the 25 years that you work hard for a person. So here at Master Investor, we want to give you the tools, the resources, and most importantly, the financial education that you need in order to make sound decisions when it comes to building passive income. So 3 types of income: earned income, tax at the highest bracket, the worst type of income because you're killing your time, you're exchanging your time for money, you're selling your time. The other type of income is called capital gain income. And capital gain income comes from buying something at a certain price and you're holding it for another time, right, to sell it on a different day or maybe on the same day for a higher price. And that gain is called capital gain and is also taxed at a higher bracket than passive income. Passive income is the best type of income, and it's actually the type of income that the ultra rich work for their whole life. And passive income is the same thing as cash flow. That's why cash flow are the most important words when it comes to business. If you want to talk to any businessman, anybody that's successful, if you want to get their attention, you're going to be speaking about cash flow, because we love to have passive income in all of our deals that we do. So when we are starting up a business, we want to know, hey, is this business going to give us passive income, which is the type of income that comes in on a regular basis without us working. And that's the definition of a true asset. It's something that puts money in our pocket whenever we're not working, and it grows. Can we scale that business? Can we scale that investment? So when people invest, majority are doing it for capital gain. They buy a stock somewhere for a certain price. They pray that the economy gets better or that the stock goes up in price so they can sell it to a bigger sucker for a capital gain, and it stacks at the higher bracket than passive income. So here at Master Investor, we focus on passive income, and the way we achieve that is by building our asset column with cash flow and assets that we control with our companies. So you're going to have to incorporate at some point with a company, and then that company will hold assets that are producing passive income, real assets. A real asset is when something puts money into your pocket whenever you're not working, and it goes up in value, and doesn't matter how the economy is doing, and it's still making you rich. It's still providing cash flow, passive income, even during bad times. With financial education, you can achieve that, and you can get rich for free, because ultimately, when you look at a business or an investment, when a rich person takes on that investment or business, we go into that because we understand that it's going to print us money legally for free. So even if we put any money up front to acquire that asset, to build that asset, we know that that's going to bring us money back very fast to pay for the initial capital back. We're going to recoup that back, whether we use a credit card. Hopefully we're using a credit card, which is other people's money, the bank's money. We're raising capital, right? So the number one job of an entrepreneur, we always say, is to raise capital. And then the number one skill is to learn how to sell without selling, using systems that do the selling and telling for us, even while we're sleeping. And we're going to show you how to do that here at Master Investor. So stay tuned. Make sure you subscribe to our channels. Leave us a comment. Share this great content with others. So let's dive into today's blog. Why understanding the history of money is the key to wealth. We sure have seen people talk about the economy, inflation nowadays like it is something new. But let me remind you that as long as we have financial education, we must use the inflation and economy to make us wealthier, not poorer, and not shrink. When the economy is down, we actually expand. Since these factors about money are only indicators to help those who have the financial education to get more wealthy. Why understanding the history of money is the key to wealth? Because when we have a better understanding of business, then we are a smarter investor, period, okay? Simply put, bad economies and inflation are extraordinary for the financial educated entrepreneurs and investors. Over the last couple months, the alarm bells of recession have sounded. Most CEOs are tightening their belts, and employees are fearful they may be laid off. Remember, technology is moving so fast ahead of us that the jobs are becoming obsolete. So if you're someone that relies on a job, in 10 years, that job might not exist because the owner might just acquire an artificial intelligence, right? A robot that is going to do the job much better than you are, and it's not complaining about anything. It's not asking for a raise. So the job that you have today might not be as secure as you may think it is. So the U.S. posted a negative GDP growth, admittedly small for 2 quarters in a row, a classic signal of recession. Most people aren't asking if we will have one. They're asking just how bad it may be. Understandably, many people are concerned, specifically the poor and the middle class. The rich, not so much, because we use the laws, we use the knowledge that we have about money to make us richer when everybody's panicking, right? So the rich aren't too concerned with whether the economy is up or down, because a master investor knows that the economy goes up and down. So we're not predicting the market or the economy, but we are prepared for any type of economy because we have the knowledge to do so. And specifically the financial education that we're providing here at Master Investor. When you know these things, then you can actually take advantage of inflation. You actually welcome inflation. You're like, hey, I want inflation to continue to go up, because then we can actually borrow money for dirt cheap, for free. So it's actually a great thing. We know how to make money in either scenario. That's the key of having financial education, because we know how to make money in any type of economy. This is because one key point that I said in the post, this is because the wealthy understand one important thing about money that many others don't. It is a currency. It's not longer money, because in 1971, President Nixon separated the gold standard from the dollar. And from that point on, it was August 15, 1971, when that happened. New laws of money have emerged from that point forward, because the laws change. And so people that are still playing with the old rules of money, they're struggling, and they will struggle in the future, because they're not playing by the new rules of money. That's why we wrote the 10 new rules of money, so that you can have that under your belt and play with the new rules of money so you can become wealthier, okay? So get our book on Amazon. I'm going to leave the link below. You can go to our website and get it from there, as you will get more VIP benefits when you join our platform here at Master Investor. So money became a currency after 1971. It became fiat money, became paper money, monopoly money, and specifically today, just an idea backed up by confidence. Okay, so you can write down, money is an idea backed up by confidence. Marinate that, understand it, grasp your mind around that terminology. Money is just an idea backed up by confidence. Why understanding the history of money is the key? Because it gives us an overt advantage into what we can use to make us wealthy as everyone else gets poorer. The rich are getting richer. Let me share this chart with you. As you can see on the screen that we're sharing on YouTube here, I'm also live on Twitch, so welcome to the Twitch family. Make sure you subscribe, give us a like. Glad to be here with y'all. What this chart shows is that the rich know something about money that the middle class and the poor don't. During booms and busts, the poor are continuing to get poorer. It doesn't matter which economy it is. The middle class are in basically hot water, right? The rich are getting richer, but how? A history lesson on money. In our book, The 10 New Rules of Money, we explain further the new rules of money that have emerged in the past decades. I want to talk about the 4 economic ages of humanity. They are, number 1, the hunter-gatherer age. In the hunter-gatherer age, humans relied on nature to provide wealth. They were nomadic and went where the hunting was good and the vegetation plentiful. You had to know how to hunt and to gather or you die. For the hunter-gatherer, the tribe was social security, socio-economically. Everyone was even. They were all poor. Number 2, the agrarian age. The agrarian age saw the rise of classes between people. Due to the development of technology to plant and cultivate the land, those who owned the land became royalty, and those who worked, it became peasants. The royals rode horses while the peasants walked. Socio-economically, there were two groups, the rich and the poor. Number 3, the industrial age. While many people will place the beginning of the industrial age in the 1800s with the rise of factories, I actually think of it as beginning in the 1492 with Columbus. When Columbus struck out to find the new world, it was to find new sources of valuable resources such as oil, copper, tin, and rubber. During this time, the value of real estate shifted from growing crops to providing resources. This led to the land becoming even more valuable, and three classes emerged: the rich, the middle class, and the poor. So in the industrial age is when the three classes emerge. And then now we are in the information age. Today we are in the information age where information leveraged by technology and expensive resources like silicon produce wealth. This means that the price of getting wealthy has gone down. For the first time in history, wealth is available to just about everyone. There are now four groups of people: the poor, the middle class, the rich, and the super rich. As Bloomberg reported, after years of declines, America's middle class now holds a smaller share of U.S. wealth than the top 1%. The reality is that money is no longer money, as we said earlier. It is a full currency, and the true value in a currency world is being able to control and manipulate information. That is why the rich and the super rich have become experts at losing money. So specifically, knowledge is the new money. Information is, but more than information is knowledge, because not all information is great information. You can have garbage information and do the wrong things. That's why we need to have financial education to make sound decisions and to know who we listen to. Losing money in the blink of an eye. The problem with the information age is that you can lose a lot of money very quickly if you blink and have the wrong education, which comes from the salespeople on the internet preaching about bad economies and giving you the wrong business principles that do not work in all economies. They just want to sell you for a commission. As a master investor, we know that the economies go up, sideways, and down. Therefore, we know how to prepare for any type of market. The pace at which information flows and changes and the massive amounts of information that come our way can make it very hard to respond correctly and in time. This reality makes it hard to think proactively, because if you're not careful and you don't have a financial education, you'll react to every piece of information that comes your way. The answer to being rich is not to have more money. Have you ever heard anyone say they wish they had $1 million? They will be rich, right? How about someone wishing they will win the lottery? Then they will be set. Of course, the world is full of people who have made $1 million or won the lottery and lost it all. They are not rich any longer. Why is that? Fundamentally, it is because they misunderstand what makes you rich in the first place and what money really is. Remember, it's a currency today. It's fiat money. It's fake money. It's an idea backed up by confidence. And information is the new money, and knowledge is what makes us wealthy, because with the information that we have and the knowledge, we know what to do with the information, with the money that we have. The mindset of the poor. Today, traditional assets do not make you rich or financially secure. Just ask all those investors who, and quote unquote, because they're not investors, who lost everything during the last great recession when their homes and 401ks were decimated. Today, you can lose money on business, real estate, stocks, bonds, and commodities. Any asset class can fail at any given moment. Just look at what has happened in the age of COVID. This wasn't always the case. Our generation, our parents' generation, for instance, at least for my case, could count on the old rules of money to work. For most part, the dollar was steady, so savings made sense. Houses rose modestly each year in value, and employers took care of of you in retirement. So you had a secure retirement if you work for a company. But now, since the laws have changed in 1974, ERISA was enacted, and we talk about it here on Master Investor all the time, which is the Employment Income Security Act, that basically says all the employees in the United States are obligated to invest in fake vehicles that are called assets, such as 401k, mutual funds, basically forcing them to invest in the stock market. But all they're doing is giving part of their paycheck to the company, and the company puts in whatever they put in. So you're not, you basically, if you're not putting anything in, you decide not to invest in the 401k, and the company does not put anything for your retirement. So by the time you retire, if you didn't put anything in, you have zero. And if you have put something in, you might have zero because they will lose it all because it's too risky. You don't even know what they're doing with your money at the end. You have no say in what they're doing with your money. So you're giving control away. And here at Master Investor, we give you financial education so you have control over what to do with your money because you're doing it with the right knowledge and you're applying it into your own life. That's what we focus on your asset column, right? It's all about incorporating our company and acquiring assets that produce passive income. That's the holy grail, right? That's what we're going to get to. It boils down to, hey, how many assets do you have? How much money are you making while you're sleeping? Are you making anything? Do you have to go to work hard to make money? Or how do you make your money today, right? Figure out how is your income coming to your life, and then shift whatever needs to be changed in order to start receiving passive income. We welcome you to join here our community at Master Investor. Start with one of our books. It's worth the money because it's an investment actually to yourself. You're going to have the book for life, and we're going to give you a lot of valuable content to our paid partners. That's what we do. We give you benefits, and we give you exclusive content that is going to take your knowledge to the next level. The mindset of the rich. The rich have a different mindset when it comes to money. We understand that there are new rules to money and that the old rules no longer work. So where the poor think that in order to be rich, the rich know that savers are losers, and that the magnitude of your wealth is relative to the velocity of your money. And the formula of the velocity of money, we talk about it on another video that we did, which are 5 steps. Acquire a cash flowing asset, recoup the initial invested money back, keep control over the cash flowing asset after you recoup the money back, right? You still have control over that asset. Step number 4, move the cash flow from the asset into a new cash flowing asset. And step number 5, repeat the process. And that's how you get to become wealthy for free. You print money. You have cash cows printing your money legally for free. You have recoup all your money back. You're investing into new assets that produce more cash flow. Even while you're sleeping, you're getting wealthier. Where the poor think that you need a good education in order to be rich, the rich know that financial education is actually much more important. The poor think academic education is important, like going to school, getting a master in some sort of career, right? And that is not true anymore in the information age. True entrepreneurs and business owners care about your experience. Even Elon Musk, I read an article the other day, I think it was a tweet or something, that he mentioned that he doesn't even care if you're graduated from a college for you to work at Tesla, right? And so, but he also doesn't promise you that he will keep you employed for the long term. He might fire you or he might lay you off because he has a new AI that took over your job. Just like he's building these trucks that are almost can be driven without a driver. They're fully electric, and it's going that way, where you just program the truck to do a certain trip. just by GPS. So, two types of financial education information. In the information age, traders are in the worst position. It is nearly impossible for a trader to keep up with the flow of information. And since they make their money through transactions, buying and selling, they are susceptible to market swings they have no control over. They are addicted to immediate information. I don't like to trade. Instead, I prefer to invest for the long term in assets that cash flow and that adjust with inflation and that hedge with inflation, to be more specific. In other words, even when inflation heads through the roof, as it will continue to rise, because the more we print money, right, the more the government prints money, then inflation will continue to rise. So we need assets that would adjust with inflation. So when inflation goes up, then the asset prints more money. Real estate is a good example of that, because when inflation goes up, you just charge more to the tenants. Same thing with products such as food and things like that. A gallon of milk doesn't cost the same as it used to, because inflation now says, hey, the gallon of milk costs $5 instead of $2. So for the person that is working hard to earn a gallon of milk, to go buy a gallon of milk, they're gonna have to work harder and give more of their time. So they're becoming poorer and poorer. Do you see why they become more poor? Because they're working hard for money instead of making money work hard for them. As such, I pay attention to the operating history of a particular asset I'm purchasing and the trends over many years in the industry of that asset. I pay secondary attention to what is happening right now. I'm addicted to historical information, and that's the key. That's why we're studying the history of money right now. If you want to get rich quick, you can take your chances with the media information. Of course, you can also get poor fast. If you want to build a lifetime's worth of wealth, I will stick with historical information. For instance, historical information tells me that every currency in the history of the world goes to zero. As such, I'm investing in gold, silver, and oil, as well as real estate. These assets go up in value as the value of currency goes down. There are long-term investments in assets like oil wells and real estate, also cash flow, putting money in my pocket each month and actually every day. Sure, I still pay attention to some of the media information. For instance, we watch the price of the gold closely, but not because I want to sell my gold and make a quick cash profit. Instead, I want to know when gold goes down low enough for me to buy some more. I trust gold more than the dollar in the long run. Let me share some more financial education from our latest book, How to Build Cash Flow with the Internet, Turn Passive Income On. You can find that on our main website. Gold versus fake money, right? And you can see on the chart in front of you right here. As you can see, over the last nearly 120 years, the price of gold has held its value relative to the world's money. That is because gold is real money. It is gas money. That is historical information you can rely on. You see the dollar goes down, the euro is going down since it was enacted. You can see all the currencies of the world go down because they go back to its natural value, which is zero. Another chart that I have here for you is the U.S. purchasing power and currency in circulation. From January 1971 to June 2018, the U.S. money supply increased 32.3 times. This was accompanied by an 84.1% drop in purchasing power of the dollar. So the more money supply, the more we print money, the more the government prints money, then the purchasing power of the dollar goes down almost to 90%. And it's not going to take another 100 years to lose the 10% that is left. So price inflation is a direct consequence of increased money supply. Another piece of information that is historical and easy to understand is that there more money, currency, right? It's not real money. The more dollars the government produces and puts into the system, the lower its value becomes. This is why I don't trust in the government's money. I trust timeless money like gold, silver, real estate, and oil. So don't save money. Learn how to move dollars into acquiring an asset that produces cash flow, that brings more cash flow, so that you can acquire real assets and real money like gold. The good news is that, like the rich, you can learn to print your own money by understanding the history of money and how to use that information to your advantage. For the trader, immediate information rules. It is about buying and selling at the bottom and the top. The problem is you never know exactly when that is. So you have to make your best guess. And that is gambling. Sometimes you make a great guess, other times you make a tragic one. It all depends on the quality of your information. How the mind works. Here's a helpful framework for how the mind works. It has the memorable acronym BEAR, BEAR. Belief, right? B for belief, the fundamental thoughts that form the basis of all we do. These are almost completely subconscious. Our beliefs are our framework for how we think and act, but our beliefs aren't reality. They are our opinions of what we believe to be true. These opinions closely determine our actions. E, excuses, the things we verbalize that stem from our beliefs, such as that people say you don't have time. Excuses create a cycle that return you back to your beliefs, no matter how flawed or inaccurate they are. And you rely on your built-in excuses based on your beliefs to keep you rooted in the same bad habits. A, actions, the decisions we make based on our beliefs and excuses. With enough time, excuses lead to bad decisions, and these bad decisions are your actions. And yes, inaction is the same as action. And there are results, the natural outcome of your beliefs, excuses, and actions. They just desserts. If you want to change your results, you have to change your beliefs, which changes our excuses and results in higher quality actions. I will call this mind shift. And if you want to be rich, you have to have a money mind shift. One that gives you the mindset of the rich. Behind every great movement in history and every great achievement on an individual level is a great mind shift, a complete change in mindset that changes the course of history, public or personal, forever. The 4 mind shifts of humanity. Earlier, we wrote about the 4 economic ages of humanity as we went over them. When you think about economic ages, they are really global mind shifts spurred by changes in technology and human thought and what is possible because of that technology. Today, since we live in the information age, there is more information than we know what to do with at our fingertips. Information is the new money. But just like the poor and the middle class, having lots of money doesn't make you rich. It is know what to do with that money, and that is knowledge. But even though we live in the information age, it is not information that makes you rich. You must make that mind shift from information to knowledge. The difference between information and knowledge, regardless of social, economic class, information is largely free and abundant. For the first time in history, people can access information and learn about anything, no matter whether they are rich or poor. While all this information is valuable, it is not as valuable as knowledge. Knowledge gives you the ability to filter out unimportant information, to find the important information. Knowledge gives you the power to act on information. Knowledge is what makes you rich, not information. The knowledge mind shift. Oil is valuable. Many people would love to own lots of oil, but owning lots of oil won't make you rich. It is making the mind shift to understand how oil can make you rich that brings wealth. For instance, crude oil is of little value until it is refined. That is a complicated process that requires science and equipment. It takes knowledge to refine oil and make fuel. Fuel is valuable and it will make you rich, but you can't have fuel without oil. Today, it is not different in the information age. You could have all the information in the world, but without a mind shift to knowledge, you could still be poor. The reason Mark Zuckerberg, for instance, is such a success is because he has knowledge of what to do with information and knowledge of how to build technologies to leverage information. Mark Zuckerberg's knowledge of internet technology enabled him to build Facebook. He also knows how to build a team and find people smarter than him to make Facebook bigger and better. Finally, he has knowledge that information is valuable for selling. Facebook excels at collecting your information, processing it, and selling it to advertisers who target their ads to make money off of you and your interest. Would you make the money mind shift? That is the question. It is not the information that makes Mark Zuckerberg rich. It is the ability to process and leverage it. Again, that is knowledge, and knowledge comes from education. We live in an age where wealth is abundant and accessible by everyone, including you. But you have to be financially educated to be able to process it and leverage it. Today, knowledge makes you rich, and a lack of knowledge makes you poor. In this brave new world, it is your knowledge that is the new money. I encourage you to increase your financial IQ by increasing your financial education. Then you will be able to find the important information and have the knowledge to act on it. Invest for cash flow, and that is our advice here from Master Investors headquarters. Finally, our advice is the same as it has always been. Invest in assets that produce cash flow and hedge against inflation, that work in all economies, that makes you rich and wealthier regardless of what the economy is doing. In order to do that, you need deep and comprehensive historical information about money and asset classes like we're providing here at Master Investors Company. This is why I always encourage people to invest first in their financial education. Immediate information will come and go in the blink of an eye, but a comprehensive financial education will last you a lifetime and help you build wealth for generations. For more information, check out the financial education resources here. I leave a link here on our blog and also in the description of this video here on YouTube. And for the ones that are watching us on Twitch, I'm glad to be here in all of the platforms that this will be broadcast to. Welcome to our community, bringing you the good and bad news of money, the business principles that work in all economies. Remember, knowledge is the new money. That's what's going to make you wealthy. In order to have knowledge, you need financial education so that you know exactly what to do with the information that you're receiving and weed out the bad information that is not important and just keep the one that will make you wealthier by applying it into your life and taking massive action. I want to invite you to read one of our e-courses that we have available here on our website. You can go to the all courses section. You can have a live consultation with one of our coaches, even including myself. I'm very involved in everything that the company is doing. We are more than an investment management company. Remember, our mission is to elevate the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities that create passive income, wealth, and ultimate freedom. Here are the courses. As you can see, what are the 10 new rules of money to become wealthy? You can also find that on Amazon. How to build cash flow with the internet, turn passive income on. This has over 500 pages of financial education. It has a step-by-step guide in how to build your first asset and get to your first million if that's what you want, or maybe your first $10,000 per month in cash flow, or whatever your goal is to financial freedom, okay? Everybody's wealth goals are different. It depends of the person, and so we have this step-by-step guide for you here at Master Investor to help you achieve that. We hold you by the hand and we help you understand money, business, and investing so that you can make sound decisions when it comes to building wealth, okay? Let me show you here on Amazon how to find our book. If you want to go there and read it on Kindle, you can go there. The 10 New Rules of Money by Master Investor, and you're going to find it right there, okay? Just You can read it in Kindle and you'll have it forever. But I encourage you to come here and get it from here, because you'll have access, you'll have your back office, and you'll have more VIP benefits that we are offering for the ones that are coming to our website and getting it straight from here. For now, that's it for today. Thank you for your time, and make sure you subscribe to our channel, turn the notifications on. We appreciate you very much and the time you have given us to watch this extraordinary content. Give us a like, comment, and share. I'll see you on the next video. Thank you.